But let's get in our fundamental expert for the day. We've got Avinash Gorakshekar, Head of Research at mintdirect.com. And Avinash, let's talk about the first stock, INDO Industries. Interestingly, holding up very smartly. What are the long-term targets that you have set out for this one, and what fundamental factors attracted you to this?
Avan, to talk about INDO is a vertically integrated textile player and actually operates in the home textile segment. So it doesn't operate in the commodity segment, typically cotton, yarn and spinning. And in the last 4 years, we have seen remarkable transformation happening in the business. Home textiles now account for roughly 75% of the revenue. And even on the EBITDA side, almost 88% comes from the home textile front. So it's a value-added textile player. As far as the opportunity size for INDO goes, home textile market is a $75 billion market, which roughly is accounted by US and Europe largely. Clearly, in terms of order book, we understand that the company is sitting on a very large, healthy order book for the next 12 to 18 months. Clearly, in terms of earnings, which is most important, I think, we have seen a lot of textile companies getting re-rated, clearly because of the value-added mix. In fact, in INDO's case, clearly with a good value-added mix in the revenue mix, profitability margins also improving. And more importantly, I think they have an expansion which is already ongoing, which should be operational from third quarter of this financial year. My sense is that probably you could see earnings growth compounding about 20-25% for the next 12 to 18 months. We have a long term, that is a 1 year target price of 258 here, and clearly valuations look very attractive. I think vis-a-vis to other large textile players which command multiples of 8 to 9 times, this company has a multiple of just about 4 times 1 year forward. So I think clearly even at the current levels, an investor can expect good upside.
Avinash, ABM Knowledge, that looks like a very interesting one. They focus on e-governance. Tell us a little bit more about this not so known company.
In fact, Aisha, this company is basically focused on only e-governance business, especially from the state-run organizations. They started sometime in 1988. And in the last 16 years, in fact, they have achieved market leadership in the e-governance space, especially in areas like municipality, then water authorities and government resource planning projects. In fact, they operate in 5 states, that is Maharashtra, Goa, Delhi, Bihar and Meghalaya. They have roughly about 400 customers, and what is interesting is that the e-governance space is slowly now catching up. We are seeing that not only does this reduce time, it reduces corruption, the bureaucratic delays. So I think this part of the business is going to show a lot of traction in the coming 3 to 5 years. Most importantly, I think in terms of the balance sheet, they have managed their balance sheet pretty well. In fact, clearly they have a debt-free balance sheet. ROE and ROCs are roughly about 22 to 24%. And very importantly, in this business, Aisha, the competition is very limited. It takes a long time before you crack a deal with the government, and working with the government is not an easy cup of tea. So clearly, I think they have a niche business model, very good EBITDA margins of roughly about 26-28%. My sense is that probably in the next 2 years, you could see 20-25% earnings growth, and valuation multiples, for this e-governance company are in single digit. Right. They trade at 8 times. So clearly a niche player, and I think probably you could see a price of 200 plus over the next 12 months.
Okay, I hope our viewers have taken note. Those are some interesting stock picks. It's INDO Industries, target price 258, as well as ABM Knowledge with a target of around 216. Those are the 2 top wealth creators according to Avinash Gorakshekar. But let's get in our viewer query then for the day, and this one has been sent in by Mr. KK Garg, a retired naval officer.
I have 300 shares of RCF, Rashtriya Chemicals and Fertilizers, purchased at the rate of rupees 59 per share. Should I continue to hold or should I dispose them off? What is your advice? I am a long-term investor. I can continue to hold for another year or so.
Avinash, what would you recommend to Mr. Garg? A retiree holding RCF shares, a long-term prospect is what he's looking for.
I think he should hold on to the share, Aisha. I think if you look at the business model of RCF, clearly, I think I am looking forward that possibly urea prices would get increased in the coming quarters. The government has also given clear indication that urea prices could be risen. And more importantly, there are very little chances that RCF could see any dilution. In fact, we have been hearing that the company will be utilizing its existing piece of land for putting up a new project. So I think if we can wait in for 1 year, my sense is the fertilizer space will definitely pick up probably from the second half of this financial year. And probably my sense is probably he could get a price target of around 70 to 75 if he holds on for the next 1 year.
Okay, thanks very much then, Avinash, for giving us that advice and helping our viewer out on what to do exactly with RCF. Hope Mr. Garvi helped you out with your query. On that note, let's also remind all of our viewers that you can send in all of your queries and suggestions to rtb@et-now.com, and you can also send in your queries on our Facebook page. That's facebook.com/etnow, so do keep them coming.
Find us on Facebook at facebook.com/etnow, and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.